Good morning, everybody. It's Christopher from Serene Education with the 4 majors news update for the 9th of November 2012. Hi guys, end of week. Let's have a look and see what's been happening and see how things are going to progress for the last day of this week. Let's have a look at the euro to start with on our 4 majors. Let's have a look at that daily. What happened yesterday? Well, we've seen price falling past couple of days, however, coming unstuck or being supported now at the near-term February tracement area here in the shape of the 38.2, which happens to be also a price support and resistance level. If I just draw a horizontal line, you can quite clearly see that previously here we had a bit of resistance in June, slight support here after the breakout before we saw price testing that institution moving average near term here in September. And now here on the hard right edge, you can quite clearly see that price is now, after the fall away from the institution a couple of days ago, yesterday in particular, finding a bit of support, a consolidation candle yesterday, and this morning in the Asian session we saw a bit of buying to start with. However, now price is hugging the lower end of that candle wick, but still above that all-important support, or the consolidation support here in the shape of the 38.2 February tracement. So we took the low that we saw in July to the high here currently in September, and you can see that February tracements have been plotted, and we saw price breaking through that 12,900 not too long ago, and now price is actually consolidating at the 38.2, which is here just roughly below the 12,750 mark. So price, obviously, if this is to continue to be bearish, you can quite clearly see that price has been falling recently. If it's to remain bearish, and you can see the histograms and everything's in our favor, all the moving averages above price, and most importantly our template telling us we should be looking for negative sentiment. We have the red arrow, red candle, and the histogram on the other side is telling us the sentiment is negative. We want to see this this 38.2, this 12,750 mark over here being breached to see any further downside movement. Failure to do so, and we see price now finding support here, it's ultimately going to see price moving back towards an institution moving average roughly around the 12,800 mark. Okay, so it's imperative that we see price now falling below this area. On my 4-hour chart, you can quite clearly see that price yesterday in particular, you can see a lot of support through here. From 1 o'clock onwards, you've just seen a lot of indecision candles, a huge spinning top here, followed by a doji, followed by a further 2 candles of indecision. However, still falling up into that stage. And then this morning at 5 a.m. GMT, you can see that price has now just moved to the upside. And well, the close of 5 a.m. GMT this morning, you can see this candle from the start of the Asian session, Tokyo session. You can see a lot of buying sentiment, and that, however, has not taken us above the intraday resistance level, 1277. See 1277 here. Okay, you had price support here through the 5th and 6th, and then you can see resistance through this morning, or the past couple of days, and then this morning. It's imperative that if we're going to see the price moving to the upside again, then, or pulling back towards that 1283, which happens to be our institution moving average on our daily, we need to see this 1277 being breached. However, if we don't, then you're seeing potentially a consolidative range here intraday at price has been capped between 1277 and the 1273.50 mark. So if that's the case, then we want to see that break of that 1273.50 mark at the downside. Notice the histogram and everything above is telling us we should be looking for negative sentiment. There's a lot of air between our moving averages telling us it's a strong negative sentiment candle, or sentiment setup, and histograms are telling us we should be looking for nothing more than negative sentiment. Intraday, you can see near term a lot of we saw selling off, but just near term you can see it's been quite rapid, and you can see these swing lows getting a lot larger. So you can see where price is trading now. In conjunction with all that, we should be seeing a breakout or a continuation, if anything, to the downside. So look for a nice break and close below 1273.50, especially on an hourly candle or a 4-hour candle to confirm, and then we should be looking for the downside. Onto sterling, let's have a look and see what's been happening here. I've got the 1600 marked in as a major support and resistance level, psychological support and resistance level here at 1600. And you can see what price has been doing over the past couple of days. It's been finding resistance under that 1600. Before, you could see it was trading above this institution moving average here. And, sorry, not the institution moving average, the 1600. And you can see the histogram up until that stage was still positive. As long as I maintain above 1600, there's always more likely to be price moving higher. However, it was capped near term by 1500, and we had a lot of candlesticks here that confirmed that there was a genuine resistance level here, this bearish engulfing candle target 1600. Evening was a morning star, sorry, an evening star formation at resistance, and price reverted to the 1600. Another classical evening star here, and price reverted to 1600. Near term, we've seen a lot of spinning tops, and a hangman here at the underside of 1600. Notice the histogram on the other side now is starting to go red, and you can quite clearly see our lows have got lower in this consolidated range. Now, as long as it maintains below 1600, we should see price reverting to the downside. So intraday, we should make a note of that 1600 and ensure or look for any signs for selling in our 4-hour and our hourly. So let's have a look at the 4-hour. You can see a lot of consolidation at the underside. One or two indications of breakouts, but an evening star formation here. Notice the histogram has remained negative throughout that period. Most important, our institutions above price. So even though you're seeing buying, ideally, if you're buying on a 4-hour time frame, you want to see the institution below price to tell you it's genuinely buying sentiment. Otherwise, you're just buying into resistance. And if you're buying into resistance, you're clearly going to see price moving against you, and therefore you're going to see a loss. So very, very important. Here you can see near term consolidation under the 1600. So you can either box this. I tend to box it and say, listen here, you give me a clear direction. You can see quite clearly here the 4-hour. I think it took a lot of people by surprise here. This massive 4-hour candle. We'd like to obviously see that close. The deeper it went into selling, the more stronger the confirmation this was genuine negative, and then we should be looking for the downside here at 59. Quite a small target, a lot of risk. However, would have given us a real good sentiment for further selling. However, move back up into this consolidated range, and it's still trying its damnness to try and hug the underside of 1600. So the sentiment's still genuinely going higher, but it's not pulling anybody with it. It cannot find that buying sentiment, and that's what we need. If price is still wanting to trade above 1600, but it's still hugging the underside of 1600, we want to see price closing higher than 1600 with a lot of momentum to tell us that it's genuine sentiment. Otherwise, it's just consolidative with the outlook long term to break to the downside. And if we do see that, then 5900 would be our first target. Onto the US dollar Swiss franc. Let's have a look at this particular pair. A lot of consolidation through September, October, and a nice little clean breakout here in November. Clean, nice move up, but you can see consolidated nonetheless as we head into that February tracement pullback. I've taken the high here we saw in July to the current low that we've seen here at 920, and you can see the 23.6, which actually consolidates quite nicely here with the institution moving average, which is clearly resistance here at 940. Now we've had a break above it. Price is moving higher. Histogram has started to go blue across the board, and our template is telling us we should be looking for buying sentiment. And as long as it maintains above 940, we should be looking for nothing more than buying sentiment. And our first target should be the 950 here at the 38.2. Get above that, then we hit towards our second target at 50%. 61.8 is our third, and fourth target at 78.6 before we see price making that move up towards that magical 1,000 mark that we saw price attempting back in July. So as long as it stays above 940 intraday, then we should be looking for buying sentiment. Look for opportunities or buying sentiment comes through, and then we can actually buy on the bounce. You can quite clearly see we've had a bit of consolidation here on our 4-hour time frame. Notice the histogram has remained more positive than negative. Okay, it's very, very important, and it's trading above all the moving averages, which confirms that we should be looking for buying. As long as it maintains above 940, then we should be looking for opportunities to the upside. So be patient, look for a nice break and close above this consolidation point here on the last 4-hour candle at the high of 947, and we'll target the 950. It's quite a close call, a lot of risk for a very small return. So just be very, very careful on your entries. If you are going to be looking for opportunities to the upside, please take them when they present themselves. Make sure that you work out your risk and reward ratios. Make sure you have everything in your favor and you're happy with that before pulling the trigger, because if you look at where price is trading now in conjunction with that, it's quite close. So there's a lot of risk on the table for a very small profit. Okay, you've got to be well aware of that. You might have the best trading platform in the world, but if your strategy doesn't allow you to really do your risk management that correctly, then it's worth nothing. Okay, you can quite clearly see these highs now starting to slow down now in the hourly as we head into that 950, and you can see quite clearly over the past couple of hours prices generally fallen. So if anything, we could see price reverting towards that 940 near term. To see any further upside movement, we've got to see price breaking above the current high, which is 947.50, And if you get above here, you don't really have a much room for potential profit to the upside. So near term, let's look towards 940 again, which will bring us back towards that institution moving average on our smaller term time frames. Last pair of the day is US dollar, Japanese yen. This is the one that probably gave us the most movement yesterday. A very, very negative day yesterday for the US dollar against Japanese yen. And we're looking for price to actually fall back and to remain above 80. I didn't mention yesterday on my video analysis, as long as it maintained above 80, then there was potential for further upside movement. However, as I said, if it closed below the 80, we should be looking for further selling opportunities. It's now physically closed well below this consolidated range and closed right into price support and resistance that we saw here back in the early parts of August. So, and you can see the candle as we speak now, trading below the institution moving average. Both the institution and the 20-period moving average are flat. That's telling us we should be looking for consolidation at this level. You can quite clearly see that as long as it maintains now below the institution, we should be looking for selling opportunities intraday. Okay, we've got to see that sentiment intraday moving, and you can see the current trend. If you take trend, if you take the wicks, if you take the bodies, very, very important. You can take the bodies here. You can see where price is trading right now in terms of the intermediate trend. You can see that's in play. So intraday, we should be looking for potential resistance. Ideally, we'd like to see it close lower than the prior day candle to obviously confirm that we should be looking for further sentiment to the downside. So intraday, we should see, particularly on our 4-hour charts, that negativity is starting to play through here. Yep, there we go. You can quite clearly see I've drawn the low. I've taken the fib of our current low down the bottom here, and I move it up to the current high that we've seen just recently at 80.70. You can quite clearly see the 22.6 was broken just recently, and we saw a lot of selling into the 38.2 now. Fib retracement, which is a current support, prior support with resistance level here. So very, very important that we actually see this being broken now, and the quicker we get to see this level here being breached and this intermediate trend to the upside, get below the institution moving out, or target the institution moving average on our 4-hour as our first target. If we break below 79.40, we should be targeting 79.10, and we should see further momentum to the downside. So 79.40, we've got to be making a note of that. 79.40, there we go. That's our current support. Okay, we've got to get, price has got to break below that before we see any further opportunities to the downside. And if we do get a break below that, then we should be targeting that 79.10, which is our next consolidated range, support and resistance level to the downside. So very, very important that we get to see price actually making headways towards those. Otherwise, if we don't, then we're going to see price actually trading into major support and resistance levels. So it's imperative that we get below this area here before we see price attempting further downsides. Okay, so very, very important. Get price below here. Make sure that price actually closes lower than 79.35 here. Apologies. And if we get that, then we should be looking for nothing more than shorting opportunities. If not, then we could see consolidation here with an opportunity for price to bounce or to move sideways as we go into the close of Friday. And as long as it maintains above 79.35, then there's always an opportunity for price to bounce higher. As it stands at the moment now, everything intraday is looking negative, okay, and we should be looking for opportunities to the downside because of that. But if you look at where you want to get into price now, in conjunction where the first target is, would be back here. There's not a hell of a space here. So if this is genuinely still to be negative, we want to see a break of this area, this consolidated range here on the hourly, get below that, and then we should be targeting those intraday time frames to the downside. That's it for today, guys. I hope you had a fantastic week. We had a lot out this week. We had unemployment yesterday. We also had the election results. Obama's in for another 4 years. Let's see how far he takes us and the rest of the world. Other than that, hope you have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, have a fantastic weekend and trade serenely.